Can Tawarruq simplify commodity logistics in Islamic banking? Have you ever wondered how Islamic banking manages to provide liquidity without violating its principles? One of the key tools in this process is Tawarruq. So, can Tawarruq simplify commodity logistics in Islamic banking? Let's break it down. Tawarruq is a financial arrangement where a customer in need of cash buys a commodity from an Islamic bank on a deferred payment basis. The customer then sells that commodity to a third party for immediate cash, usually at a lower price. This method allows the customer to access liquidity without engaging in interest-based lending, which is not allowed in Islamic finance. In Islamic finance, Tawarruq involves a series of sales contracts. First, the bank purchases the commodity from a supplier using cash. Then, the bank sells it to the customer at a marked-up price, which is paid later. Finally, the customer sells the commodity to a third party for cash. Each of these transactions is independent and involves a real transfer of ownership, which is crucial for compliance with Islamic law. Now, how does this relate to commodity logistics? Tawarruq can simplify the logistics involved in Islamic banking by organizing these transactions in a structured manner. This approach is often referred to as organized Tawarruq. It reduces the risk and complexity for the bank. The commodity is not physically held or moved extensively. Instead, transactions are executed quickly in commodity markets or through brokers. This operational model minimizes logistical burdens related to storage, transportation, and handling of physical commodities. For example, instead of storing large quantities of goods, banks can facilitate transactions that happen almost simultaneously. This means that Islamic banks can manage liquidity efficiently without the complications of physical commodity logistics. Practically speaking, Tawarruq serves as a liquidity management tool for Islamic banks. The bank acts as an intermediary, ensuring that ownership transfers comply with Islamic contract rules. This allows customers to access cash quickly and efficiently. However, it is important to note that some scholars question the permissibility of Tawarruq. They raise concerns about the intention behind these transactions. Are they genuine trades, or are they merely a way to obtain cash? Despite these debates, many Islamic financial institutions have widely adopted Tawarruq. It aligns with the need for Sharia-compliant liquidity solutions. In essence, Tawarruq can indeed simplify commodity logistics in Islamic banking. By structuring commodity sales and purchases efficiently, it enables banks to provide liquidity while adhering to Islamic finance principles. This makes Tawarruq a practical tool for financing and liquidity management within Islamic banks.